Okay, so thank you for coming. So I'll talk about swing trading. I'm a swing trader. I do trade position trading and long term, but I'm a swing trader by heart. So when I was beginning to learn stock trading, I met someone whose name was Chief. He used to call himself Chief. His name was William. So he took me under his wings. He was 83-year-old trading for 80, 40, 45 years. So I used to ask him questions, a lot of questions, and he used to reply to me via email. So that's what he told me one time, besides giving me other advice. And now you need to focus on few techniques. And he gave me the quote of Bruce Lee: I fear not the man who has practiced 10,000 kicks once, but I fear the man who has practiced one kick 10,000 times. So he said, just find out few techniques and keep practicing till you master it, just like Bruce Lee. So I followed his advice. Then, so if you after following his advice and after identifying uh, profitable setups which produce consistent return, that's what I do. Keep finding the same setup which turns out to be winner. So executing the techniques, producing faster return. So master the techniques which gives you the fastest return possible, meaning the trade goes in your favor quickly. So, so that's the gist. Now, I have several techniques. Some of these techniques are listed here, 7 of them. So I'll explain to you briefly what these techniques are. So just briefly, because these are big topics itself. So the breakout strategy, so breakout reversal strategy, gap up strategy, gap down strategy, gap up reversal, gap down reversal, and then opening range breakout. So breakout strategy, I'm sure you know breakout when the stock is breaking out of the resistance or breaking down from the support. Sometimes the stocks does the reversal first to some support level or some resistance level, and then it does its thing, whether it goes up or comes down. So I'll show you some charts to explain what I'm talking about. So I prepared some charts. So breakout reversal in brief sentences. Gap up strategy. So the stocks gap up. Every day there are stocks which are gapping up, and then there are stocks gapping down. So which stocks to trade when they are gapping up, and which stock to trade when they are gapping down. So for gap up, first of all, I have to see what the market is doing. So the gap up strategy I will only use when towards the gap. So gap up and towards the gap, I would only use when the market is bullish. So I would not use gap up strategy when the market is bearish, like right now. Gap down strategy, I would use these days when the stock is gapping down. So now when the stock gaps down, they gap down. It seems most of the time the stock gaps down at some support level, like 200-day moving average, 50-day moving average. That's what happened. I'll show you from the chart. And then they rise upward. So gap down strategy, gap down reversal strategy works good on a bullish market. When the market gaps down to some support level and you identify that support, and then you buy. So when you buy, that's where you make money because your risk is defined. Whether you define the risk based on the pre-market level action or when the market open. So gap down means when the market gaps down and then it's reversing. So yeah, so it's kind of aggressive strategy, but I do use it, and I use it only on bullish markets. So gap up reversal strategy. This is what um, I'm doing right now, when the market gaps up in a bearish market, and the stock gaps up in a bearish market, that's where you have to identify where the market, where that stock is gapping up. Most of the time, the stock just gaps up in a bearish market. The market stock gaps up just below the resistance level. So if you identify that, okay, the stock has gapped up, market is bearish, and it has gapped up just below the resistance. So if you have it on the radar during the day, eventually the market is bearish like right now, or volatile like right now, the market is down 700 points. So eventually the stock will give up and come down. So the gap up reversal strategy and the gap down strategy. So these two. Now the last one is the opening range breakout. So I'm just giving you a little brief description. Opening range, this is what I also use. Doesn't matter if the market is bullish or bearish, I just reverse my setup. So the market is bearish right now. So for opening range breakout, what I do is I have a window where on the window I've set the timer for 15 minutes and I've set up the volume. So I set the timer and I set the volume, and I have set my filter saying that show me those stocks which are trading below the 15 minutes low. So the market open, there are many stocks which are making low. They are just gapping down. All sorts of things are happening these days. So, but then they reverse to the upside. So some they gap down and then they reverse and they make the low during the 15 minutes and then they never come down. So I'm not interested in that. I'm interested in those stocks which are continuously going down, even 15 minutes has passed and the volume is high. So I'm looking for that. So the stocks keep showing up in that window. And because the market is so volatile and bearish, so too many stocks show. So, and it's hard to decide during the 15 minutes which stock to select. So so I know there are like suppose 15 stocks, and I know their volume, what's going on with the volume. So I know these two. Now I raise the filter for 30 minutes. So I know these are the 15 stocks which are trading in this 15-minute range. They are all coming down with the high volume. So then I raise my timer to 30 minutes. So when I raise my timer to 30 minutes, so only when the 30-minute pass, so only those stocks will show which are trading lower than the low which they made during the first 30 minutes. So these are the stocks which I'm interested in. So these are the stocks where I start monitoring on my 5-minute chart, and I just watch and see the setup. If the setup is there, if the potential is there on a daily bar, and if let's say if the market reverse to the upside and the market suddenly turned green, so or reversing, or the market was down like 2,000 points and now it's down only 500 points. So the market is reversing. So I don't want to take the trade when the market is reversing. So on one monitor, I'm also watching the market, what the markets are doing, like Russell, Nasdaq 100, Dow Jones, and S&P, these 4 markets. So I'm doing that, and I'm watching these stocks. So opening range gives me the idea that these are the selected stocks. And then, so let's say the market keeps going up, like today. So, and then 30 minutes left. So now 30 minutes left, and nothing is moving below the 30-minute opening range. Nothing is there. But then suddenly, oil stocks show up. So oil stocks show up. How do I get sound? Are you guys not listening? Ross saying, how do I get sound? So are you guys listening to me or no? Yes, no? Yes, okay. So Ross, you have a problem. Thank you. Please solve your problem. So oil stock. So I watched the crude. So I watch the crude and I say, okay, the crude is behaving bearish, and these two oil stocks are also making a new 30-minute low. They were retracing and now they're coming down. So those are the two stocks. During the last 30 minutes, I selected and I bought the puts. So that's the example of opening range breakout in the bearish market. So if you reverse it for the bullish, then it's same concept. So we know that these are the types of trading: scalp trading, day trading, swing trading, position trading, long-term trading. So the beauty, for me, the beauty lies in the swing trading, where you hold the position for 1 to 3 days ideally. Sometimes it goes on forever, but ideally 1 to 3 days. So you hold the position for 1 to 3 days and you capitalize on the gains. So I'm a swing and a position trader. I'm a futures day trader. I'm not a scalp trader. It's very hard, and the reason I'm not a scalp, first of all, I never it's not me, so it doesn't fit me, so it has to fit you. Some trader, they don't even do day trading. They say, no, I'm a scalp trader, so it fits them. Long-term trading, they don't know even the definition of long-term trading. For them, the long-term trading is like 15 minutes. 15 minutes is too long. For some, 3 days is too long, so it depends. So I am basically swing, so day, swing, and position. So what is swing trading? The reason I like swing trading, because it's in the middle of investing and day trading. So it's in the middle of I'm not investing and I'm not day trading. So I'm expecting that stock to move within 1 to 3 days and give me the profit which I'm looking for, and I close the trade. So that's why I like swing trading. So the objective is to maximize profit in short period of time and then minimize the downside risk. So know the stop where you would be wrong. So when you are selecting, or when I'm selecting the stock, the first thing is that where I will be wrong, when I will be wrong, and where is my like jumping point, when I will jump from the train. So first I identify that. If that is bearable, that I know that, okay, it's bearable for me, then that defines how much dollars I will put into the trade. First I need to identify where I will be out in case I'm wrong. So that defines how much dollar I'm putting. And then I'm look for the profit target. So if I know that, okay, the profit is also similar, at least 1-to-1, then I'm okay with that. So in option, if I'm willing to lose 50-60%, then I need 50-60% profit. And if my batting average is 80% and above, then this ratio works out good. So if I'm confident at 80%, every time I put a trade, I know that if I put the trade, I have 80% probability it will be a winner, because my past history says that when I put 10 trades or I put 100 trades, 80 of them are winner, 20 are loser. So next time, this trade also will be has a probability of 80%, but it depends also on the setup. So some setup, the probability may be 70%, some setup like so sure 95 or 100, some are like 75. So I track my performance based on how much confident I am, based on the setup, and based on my past history. So I track based on these two figures, and then I know that, okay, and then I also raise my exposure in that trade. If I know that this is a setup, I know it works really good, and I have a high betting average, so I would put more into that trade, but as the trade progress, not initially. So if you're doing stock trading, your objective is 3 to 7%. So when you put 3 to 7% into option trading, move of the stock trading 3 to 7%. So I define my target as green, yellow, and red. So green is 3%, meaning there's an 85% probability that the stock will hit 3%. A stock will move at least 3% from the entry, whether to the upside or to the downside. So I understand that. And then the middle target is, I call it yellow target. It's like a traffic signal. So yellow target is 5% range. So 5%, okay, so yellow target, there is a, it's 3% is like 95% probability it will hit there. That's the way, based on the momentum and the potential there, based on the analysis. So 3%. Middle is yellow is 5%, and then pushing it is 7%. But these days the stock's moving, so 7% is there. So when you move, when you take 3 to 7% into option trading, it becomes 40 to 100% return, and the return comes quick. So in volatile market like these days, the volatile market, you can get killed, or you can become very, I don't say rich, you make good money um, in volatile market. So you have to know, first of all, the market type, what the market is doing, where are the support values, where are the resistance values, what is the condition of the volatility, what is the condition of the market strength. So I do all that. I have automated everything. So I give you that report also for $27. So if you want, you can have it. It's for my personal use, but I give it every day, run the algorithm, and get the market condition. So I'm prepared every day. In the evening, I know what the market has done, what the market is expected to do. Now, when I wake up, if market is doing something else, then I plan like that. So, but at least I know what the market did today, like today. Now, what the market will do tomorrow, I will know when the market will do tomorrow something. Okay, so for swing trader, the tools, so people say, okay, well, what do you use? Do you use any indicator? Like software, what software you're using? For me, your voice is breaking. Yeah, I don't know about my voice. Sorry. I'm talking to my laptop, so it's maybe breaking. So you don't need a perfect indicator. Uh, um, you need identify the patterns. You need to understand the trend. So if you understand the trend, if you identify the patterns, then you don't need the indicator. So if somebody is using indicator on top of what they have learned, like technical analysis, then it's good. I mean, perfect for you, but not for me. So in the beginning, when I started my learning, I was learning MACD, I was learning RSI, stochastics, and all these indicators. So I was part of a Yahoo group, and the software was one software called Red Line, Green Line. So that software I bought, it didn't work. Then somebody said, no, you need to learn these indicators. So I started learning indicators, and then the combination of indicators. Okay, the MACD is here, and then RSI is here, and then the moving average is there, and then use this moving average. No, use that moving average. No, use exponential. No, use simple. So 10,000 moving averages. Have you seen? I'm sure you may be using the moving average. If you've seen people's chart, they are really busy. They have Bollinger Band on it. Okay, the Bollinger Band will squeeze, and then the stock will go up or down, and the moving average has to be here. And there are like 15 moving averages on top, and it's bouncing. The stock is bouncing on some moving average. It has to bounce. There are 365 days. So the stock will bounce in one of those moving average. So I use only 20, 50, and 200-day moving average, and 10-day exponential. Just to see 10-day exponential, just to see short term what's doing. Otherwise, I'm just aware of 50 and 200. That's my main, because the big boys use it. So, and it's like a self-fulfilling prophecy, the 50 and 200-day moving average. And I'll show you on the chart what happens to the stock on these moving averages, and then what they do next. So identify a proven pattern. So if you master, if you, instead of mastering the indicators all your life, indicators, if somebody give you something really work, okay, good, they must have done some testing and it works, so it's good. But for me, I don't use any indicator. So I use my patterns. So I've been doing it for forever now, and I execute same techniques daily. So all I have to do every day is turn on my computer, turn on my laptop, turn on my another laptop, turn on my two desktops. So I have four setups, four machines, 15 monitors. So that's the way I trade. I just make it simple. Okay, one is for just for email, and two for market, and one for this, and one for chatting with my friend. So it's like that. One laptop is for backup, and if something goes off, suppose internet goes off or something happen, I grab one laptop with, and then I run to the Starbucks if I have to. That's my part of the contingency plan. So I execute same techniques daily. Use your judgment every day. You have to. The bullets are flying every day, though, especially since last week of February. So you have to understand which stocks are moving, which stocks are not moving, which will are at the support, which are at the resistance, which one is getting bought, and which index is at support. So if the stock is at that is related to that index, then that stock will start moving up and stop going down because it's related to that index. So you have to understand all that, and it comes from experience. So use your skills, use your expertise, exercise flexibility. So you have to be flexible, not be rigid. If suppose you have 5 positions open, all of them are puts, and 4 of them are making money, and one is barely breaking even or not making money, and then you see the market is reversing to the upside because somebody is speaking on CNBC and saying federal cut 25, gone to zero rate, federal rate. Federal Reserve has made the rate to 0%, 0%. So market starts reversing. So the fifth trade, you have to either take a loss or break even or whatever. So you have to decide at that time, okay, I need to let this go. And I already made the trade profit on the four trades. So exercise flexibility, don't be rigid, understand broader markets and indices. So this number 8 is so important. If the trader doesn't understand the markets and indices, it's hard for them to make money. So it's very important to understand the market. That's why I emphasize on my markets. I study them every day. Every day I study during the day, after the market is closed, when the market, before the market opens. So 3 times I study them thoroughly and understand where they are and where they can fail. So I create the mental scenario. So you have to create mental scenarios that, okay, S&P is trying to cross 2500 level. So it's trying every day. It tries every last for 3 days. It's trying to cross 2500, but then it fails. 2529, then it comes down. So today it closed at 2529, but the futures are trading at 24, 26. So what will happen tomorrow? Maybe going down, but need to be aware that the S&P is trying to cross 2500 level. So maybe market is about to bottom out. So if the bottom out, so which stock will move when the market bottoms out? So prepare the list of those stocks. So stack probability in your favor. So when you stack probability in your favor, and then you push the button. So once you stack the probability, you just don't hesitate and push the button. So the uniqueness of swing trading is if you have mastered some setup, then the setup will give you the trade where the other will notice later. And fortune is made via singles, not home runs. So keep in option trading. If you make 25%, 40%, 60%, and then occasional 100%, 200%, so over in the long run you will be ahead. So home run will take care of the losses, and you will realize smooth and rising equity curve. So your equity curve ideally should be going up a week over week basis. Okay. So we have many services. You can go to our website called My Trade Genie, and we have many services, like 8, 9 of them, and I will introduce few more. So swing trading. So we provide real-time trade alerts. So during the day, we provide real-time trade alerts. It's specific buy price. So we don't say we say something and then something else happens. It's not like that. So I'm taking the trade, and when I send the buy alert, I'm watching that buy price. These days the market is volatile. The volatility is too high, and then the market maker makes keeps put the spread the bigger, so the wider the spread is wider, so we have to shape the spread to get the whatever the best price we can. And if the market is volatile, options are expensive. When the stock drops, then the option will become more expensive. So it's okay. I mean, I pay a higher price and I get out at the higher price. So it's good. We do provide 3 sell targets and stop. So stop is set, defined with each trade, and then 3 targets, green, yellow, and red. I do also provide the specific targets, which I know that this will hit. And if I see changes, I update the target and send the update. Sell alert. So I 99%, 100% I provide the sell alert. But if suppose if I'm sick or something happened, or internet down or whatever, the targets are provided in advance. So technical analysis charts. So I'll show you the charts, and I do post on my Facebook. So Facebook group, you can join Facebook group. So emails, weekly webinar like I'm having. I have a Facebook group. I stopped taking members after 6,000. There was too many scammers and spammers coming in. Some are just faking me on YouTube and Facebook. They pretend that it's me. They twist the name, like Genie become Genie. So they have trade Genie, Genie. Financial markets is like market. So they do that. So I stopped the Facebook group. Only 6,000 members right now. And I do provide 82-page trading system guidebook, so it's free for you. So you can you receive it, or you don't even have to become a member. Just send me email. I'll send you my guidebook. All right. So there's no shortage of profitable trades. All the work I do, your equity curve should rise week by week, and I'll show you what we have done. Just a second. Let me open another presentation. This is just this is our last week's 2 weeks performance. These are the trades. We did the puts trade. So the market turned down. First, market gave the signal on 24th of February, and then on 25th of February gave me the confirmed signal that okay, the market has changed. And since then, I send these trade alerts, like 25 of them. We have 2 trades open today. I opened a new 2 trades. We closed 5 trades, so all 5 of them winners. So we closed 5 trades, and these are 2 trades are open in oil. We did trade oils, MPC, you can see here, and then CNQ, NBL. So these are our percentage gains. Now these are my percentage gains when I like send the alert to sell. Some members have a higher percentage gain, some may have a lower. Some members, I do provide alert to buy more on certain trades to increase the exposure based on the move. So you make more money in that trade, which I feel very confident. And these are the days in trade. So 1 day, 5 day, 1 day, 4 day, 1, 3, 3. So you see the capturing the gain. So this one NBL is a 0 day, means same day. AIG we close on the same day. So this is our performance. Okay, so now I'll show you some charts. Most of those are open. So I'll show you some charts and try to explain. Now is what I will try to explain, and to be honest, there are certain things which I cannot just explain via just by the screenshot and you say, I say, oh, you see this is what I did. You have to know, you have to be there with me when I'm taking the trade. You have to be there with me and see what else is going on. So just the screenshot of a chart doesn't tell you 100% why I took the trade, because what was the market condition, what was the stock doing at that time, the other stocks were doing at that time. So there are so many things, so many variables at that time which happen, and then I take the trade. So I'm sure you know that. So this is the trade AIG. So all of them are puts trade. So AIG. So AIG, you see here. So if you look at this AIG chart, you see it looks like it was it found the support right at this level. So, I think it's 43, 42 level. It found the support. So it was because it was kept on holding it. So it looks like it's support. But then this red, it gapped down. So when it gapped down, this was the first buy put signal. So first short signal when the market gaps down after bouncing up and down at some level. So I did not notice this one, this gap down, but I did notice another gap down. So market AIG is gapping down, one gap down, then second gap, then this was a third. The third one was a little, not much, but then this third gap. So when the market gaps down three times, they say that is reaching its climax. So third gap down. So second gap is this, 1, 2, and this is not actually a gap, just little, it is gap, but it's not meaningful. So the gap needs to be meaningful, like this gap 1, this gap 2, and then this gap. So as soon as I spot early morning, so this is where opening range breakout comes to play, and the volume was high. Look at the volume. You see this red bar? So the volume was huge, and it gapped down and it made the 30-minute low. So that's where I pulled the trigger. I sent the alert to buy AIG puts. And then what happened the same day, it just kept going, 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 going. So there was enough profit to take on the same day. And the reason is you have to compare your open risk to reward. So what is your risk and what is your leftover reward? So the risk to reward changing every hour, every day, your risk to reward is changing. So when the risk to reward is not on your favor, especially in option trading, you have to close the trade. So because in option trading today you are making 40%, and tomorrow when the stock moves slightly above and the volatility is out, or the spread gets wider, or the market is flying 200 points to the upside, so everything is just goes against you. So and then you are demoralized. So in option trading, when the risk to reward is not in your favor and you are in profit, you need to take your profit. So we took the profit. Now here is the applied material. So now applied material was bouncing at 200-day moving average. You see that 200-day moving average, the applied material is bouncing up and down. So what was happening at that time? Why it seems logical that don't take the trade, short trade at 200-day moving average, because 200-day moving average is support. This is where the big boys buy stock. So, and everybody's watching. So it broke 200-day moving average and then it closed above. Then you see the big hammer. Oh man, this is a big buy going on. So somebody is buying a 200-day moving average. Somebody thinks the 200-day moving average is solid support and I need to buy. So they bought, and then the third day it closed below 200-day. So this is where I took the trade near the market close. So just before the market closed, during the last 30 minutes, I took the AMAT puts trade, and then boom, it gap down. So now the AMAT gap down. So some will say, okay, it gap down. Now I'm making too much money. I need to hold, and let's see how far it goes down. Maybe it has gone down. I don't know. Let's see, where did it go after I closed the trade. Well, it is still the same price. So it gapped down, and now when the market gaps down and we are in the profit, we need to take profit, because the risk to reward ratio is not in my favor. Because what if the AMAT start rising and start to fill the gap? What if the Nasdaq moves up? What if there's some news comes, and then so the odds are not in my favor. As soon as I see the profit, this especially the big gap down, I need to take profit. So and another thing, so and if you have another 4 or 5 trades open at the same time and they are also making money, so when you combine the whole basket of your trade closing, your profit piles up. So here some, here some, here some, here some, and then you close the trade and then you find something else, some other setup. Now here is AMD. So AMD looks like uh, it's it's uh, it's found support and it's bouncing up. But for me, this was a hanging man. So it acts hanging man. If you read about hanging man, I teach in detail. So hanging man is a bearish setup. So when I saw this hanging man in the bearish market, so usually hanging man needs another confirmation another day, but like a gap down. But I did not wait for the gap down. I saw the 50-day moving average is acting as resistance. The market is bearish. AMD is trying to rise, so I bought the puts. So I went against the trend. And then as soon as gap down next day, I took my and gap down, and then the reversal start take place. I closed the trade with the profit. So we closed the trade. Here's another one, AVGO. Broadcom went down after I closed the trade. It went down a lot. So I closed early. But it's okay. So AVGO, if you look at the AVGO, the I entered in this red candle, and then next day it moved from 243 level, something like that, like big hammer. So it's like it's hammering out the base. So it is scared. It is this candle was a scary one. Oh my God, it's like 17, 18 points up, losing. But then it stopped right there at the previous support. So next day, if it had started moving up, that would have been like a stop loss hit, but it did not. It gapped down. So when it gapped down and it started falling back down, the next day market was bearish. So this is where we made $200-300 per contract, and I closed the trade. And the reason I closed, so there are reasons why trade needs to be closed. So the reason it closed is it made the same. It hit the same support where it made this a strong hammer, and this is another one. So one, two, and then the third day it started to rise. So I closed AVGO, made like $250 per contract and closed it. But then it went down further. So AVGO is down. It's sitting at 190, 195, 199. So it went down another 50 points. So I missed the boatload of money because I exited early, but I didn't make the money. This one, Beyond Meat. So you see, Beyond Meat. Why did I take Beyond Meat? Yeah, so Beyond Meat, the market was bearish. Market is bearish. So all I'm doing is taking the bearish setup. So any stock which is moving up, it's more good for me. So when the stock is moving up and it goes to the resistance, and then the next day when the market is down, then that creates a move. So Beyond Meat, I entered based on this hanging man, and then it gapped down. Um, and I close the trade. So on this day, red day, this is where I inform that buy more, because it's telling me that it's going to fall and the market is bearish. So it's not like I'm a super trader in magic. It's the market also which is helping us. So when the Beyond Meat gap down again, this Beyond Meat gap down after we entered. So this is a big profit. So risk to reward ratio is not in our favor when the stock gaps down. So we need to take the profit. So we took the profit. Here's another one, CNQ. So CNQ, all the oil stocks are going through some are really going bankrupt. A lot of them will go bankrupt. Look at Apache trading near $4. So look at all these stocks, $32, and now it's 16. So this is where we entered, and then again next day gap down. So enter, gap down, risk to reward not in our favor, we take the profit. Here's another one. Look at this big gap down. Costco. So Costco was very volatile when we entered. It's also another scary um, chart. Hammer. Look at this one. This also scares you if you are short. So we entered puts on this day where the arrow is, and next day it went down, but then it started rising like crazy. So if you look at Costco, they are running out of all the things they sell, so they don't have things to sell. So if you have 100 item and you sell 100 and then you cannot get another 100, so revenue will be affected. And this is what happened. So based on the, I took the put trade, and then we had a hammer. So this was a crazy hammer, and then the next day it fell, and then when it gapped down big, this is where we exited, made big money. So risk to reward ratio was not in our favor. When it gapped down, we exited the trade. Again, and here is CRM. So CRM, we entered on this red bar, and then the CNBC, the Nigerian brothers, they come, nobody is asking them um, what you say and what happened. There's no accountability. They just come and say whatever they want to say and giddy up and buy this. So they touted CRM. If you have watched CNBC, they were touting CRM, and so CRM was moving, but then it did not cross the resistance at 50-day moving average. And then what happened? Tanked, gap down. This is when it gapped down. We took the profit because risk to reward was not in our favor, and then it went to 125. So CRM is sitting at 125, which is not, the price level is not even in our chart. You can't even see the price on the chart. CRM is sitting at that level, and they were telling the people on TV to buy CRM. So imagine people buying CRM. All these retailers are buying. So how many of them bought CRM just because they said? And if you, so nobody is asking, there's nothing there to ask them. They make money by just come on CNBC and talk. So me and you can go talk better than them, giddy up. So this CRM is at 125, but we exited because when we saw a gap down, again, risk to reward, and the 200-day moving average acting as support, we exited, took the profit. But right now, CRM is at 125. Again, DocuSign. So you see the DocuSign, how it gapped down again. Our entry was here. So this is a bearish candle. Market is bearish, and I think Docu was, I don't remember what Docu was doing at that time. I must have seen something, and I entered the puts, and here gap down again. The risk to reward was not in our favor, but then Docu went down more towards 66. So actually it came to 200-day moving average. So I missed out big profit on DocuSign also, because these stocks are gapping down. Now the Guild was moving up because of the medicine they have for coronavirus and all that. So so it's making this. So when the stock rising parabolically and then come down, so it has a and when you see this gap down and the red bar, so the chances are that okay, there will be another 1 or 2 day of a down move coming. So that's the chance you have to take. So we entered the puts right here on this red bar and Gilead signs, and then you see big down. So we exited on this big down move and took our profit. Here's another one, GLD. So GLD is moving up, gold moving up, GLD moving up and coming down. So we make money on the calls, and sometimes we make money on the puts, or whatever it's doing. So when the GLD gap down and other oil stocks were tanking, so when we took the trade of GLD, so what the gold was doing. So gold was doing. What are the other gold stocks are doing? What the minor stocks are doing? So put 2 plus 2 together, everything as a basket, and see what the whole basket of gold, silver related stocks are doing, what the gold index is doing. So when you put 2 plus 2 together, then you say, okay, which one I need to take. So which one looks better to you based on you, based on me is something GLD, based on you maybe is NUGT or whatever. So whatever fits you, you take the trade. So I took the trade and put send the alert. So next day what happened? So it went down and then it set on 50-day moving average. And then what happened? It gapped up and created a harami candle, which is on a bearish this red candle. And when the market gaps up, it's a bullish setup. You don't know what it will do. So we exited right here, and then next day GLD went up. So that was a bullish signal, but I didn't take the bullish side. I only took the bearish side, and I take the money and ran. So we did not make much money in GLD puts, but we did. GPS. So all the retailers are just tanking. Do you think it is enough information to start to trade? No, it takes 10 years, 15 years of practice to start to trade. So this is not enough, Alexander. This is just a preview. You're seeing the preview. This is just a preview. You have to spend 10 years, 15 years to learn, or find someone who can teach you in 10 months. But I have 10 months coaching program. So this GPS, you see how the retailers are just tanking. GPS was where $19. So from $19, just tanking. So imagine how much money them big boys are making. They must have shorted it. But we are retailers, so the news came that they are closing the stores and the retailers are going down. So I took my chances. I said, okay, I'm going to buy puts, and I bought the puts on what? Okay, although your question is so long, please send me email. I cannot read the long question. It's like a whole story. Please send me email, although. So the GPS and JWN and all the other retailers were just tanking. So you have to choose which one is making sense. So at that time, it makes sense to me, the GPS. So the next day, the retailers just gap down and taken to the cleaners. So risk to reward is not good for me for the swing. So I took because and it's option and the spread is wide, volatility is so high. Market is going up 2,000 point one day and then goes down 3,000 points. So who knows what happened? So next day when GPS tanked, like today, yeah, it was today. So we took the profit in GPS. Here is IBM. So look at this IBM. So now you see this big arrow, this big hammer candle. So at that time when I took the trade, IBM didn't look like this. It was a red bar, and it to me at that time it seems okay after this gap down. It stabilized here, but the day I took the trade, I think on 12 March, or no, not 12 March. 10 March. So this is 12, 11, 10. So something like 10 March. So after I took the trade and then the market reversed. So when the market reversed, when the market really bottoms, all these stocks will just fly high, like 20, 30 points, 40 points. So on this Apple was moving, Microsoft, IBM, Facebook, all of these stocks were moving. So it scares you, oh my goodness, I entered here, now what? But 125 was the resistance. It's just stopped. If it had continued, if next day if IBM continued on this side above, then yeah, we know that okay, this trade is not going to work and we need to close. And sometimes when you close, you switch your position to the other side, and depending on what the market is also doing. But then IBM gap down, so we came on a break even, and then next day it gapped down really big. So when it gapped down this big, so you see all these stocks are gapping down, so big gap down. So again, risk to reward ratio is not in my favor. When the stock gaps down big, I don't know what will happen, and I don't know about the market conditions. So I took the profit and send the alert. Here is JWN. We entered JWN and GPS together. So JWN, we entered on the gap down. So here's the first gap down. Here's the second gap down. So maybe there's a third gap down coming, and then it will reach its climax, maybe near $5, $6. Who knows? It's already at 15. So we entered on a gap down on a 30-minute opening range, and then today we closed it. JWN. So because the profit there next day. Here is low. So low also is scared after we enter the trade. So low, uh, so low is, so again, the low is, you see the gap down, and here's another gap. So one gap, two gap, and then the third gap is, no, so this was the third gap. See, one gap, two gap, and this is the third gap. So third gap. So usually the market gap three times and then it just stops. So three or five, but mainly three. So when we entered low and then it did the reversal. So this is one of those trade when you take the trade and right off the bat, it goes against you. So the low started forming the hammer right at this support. So I said, okay, 90, maybe 90 is support. And if you look back on the left side, this is indeed a support. And then what happened next day? It big red, and then the third day big red. So we closed low today on this big two red down. So you see big profit. MGM, all the casino stocks are just. I wish they all go to zero. So that's my wish that they all go to zero. Um, so we entered MGM. We missed all this move, big move. We entered MGM right here, and then again, risk to reward ratio is not in my favor, so I closed the trade on this gap down. So what I'm doing, I'm identifying the trade, and then you see the same theme. I'm identifying the trade, and then next day it gaps down magically. So Square is a good buy after its lows. Yeah, you buy. It must be a good buy. So you can buy. I have no idea about Square. So you see this. Let me answer Ayush. So I receive email every day. So I'll tell you about some emails I receive. So Ayush is saying Square is a good buy after its low. So he's asking me question: is the Square a good buy after its low? So look at his question. After its lows. So where is the low? Huh, Ayush? So where is the low? And then so where is the Wuba we closed Wuba today. We had Wuba puts we closed it. So where is the low? So after it lows. So low is at 10, 12, 20, 50, I don't know. So once you identify that it's after it's low, then you buy it. Now I have another member. She is a very nice member, both husband and wife. So she sent me email the day before and yesterday. She said, I like Starbucks. I like coffee. So I'm going to buy Starbucks now. And I don't like Jeff Bezos, so I'm not going to buy Amazon. So that's her comment in the email. So first of all, the market was tanking yesterday. I don't think market was up. So she said, I like coffee, so I'm going to buy a Starbucks. And I don't like Jeff Bezos, so I'm not going to buy Amazon. And then today what happened? Amazon went up and the Starbucks was down. So my point is that the market doesn't care what you like, who you hate, who you don't like for your personal reason. Market doesn't care. Whatever the market will do, whatever you do. So your own opinion doesn't count because a lot of people like MGM at 34, 30, and 25, and they like at 200-day moving average. They like 200 moving average. That's why it's sitting at 200-day moving average at $30, right? So they like, and you see what happened to MGM. So the stock market can do whatever. So figure it out. Where is the low? It's nearing the support level. That's why I ask you. So he's again asking, it's nearing the support level. So who has defined that support level? Is it you? Are you defining the support, or is the stock telling you that this is my support and buy me? So let me see Square. So maybe support at 40. Who knows? I don't know. So and I'm not buying the stocks. Uh, can you please discuss the trade that we made today? I don't have the chart, so next week I will discuss the trade, those two trades. I don't have the, I don't discuss the open trades. So I don't discuss the open trades. I only discuss the close, whether we lose or we made money or we missed it. So close trade, you can the open trade you can go on a Facebook page. I post the charts there on a Facebook group. I do post my open trades in the Facebook group. So MGM tanked. So right there, my risk to reward was not. All these questions your guys are asking is just um, is I don't know what kind of question you're asking. So Momo. So now look at the Momo again. A Momo. Look at this Momo after we entered the trade and then it gapped down today. So we entered yesterday on this bar. When it broke the support, I entered the put trade at break of the support, right? I think near the market close, and then it gapped down, and we closed the trade. So risk to reward ratio is not in our favor. So we closed Momo trade and took the profit. Here is MPC. So we took the trade on this reversal bar along with the I think we had another oil trade. So we took the trade and today uh, closed the trade. Risk to reward is not in our favor because another thing you have to see that all these trades are extended trades. You see how much the stock has already fallen. So if something news comes up, all these beaten down stock will be bought, and then we will be left behind with the losses. So, so we have to be careful on buying puts on these beaten stocks. The stock can come down, come down, come down, and then finally the music will stop. And when the music stops, then you'll be holding the trade which will not be working. So it's fine when the market makes the transition. This is where the traders lose most money, when the market is making transition, not the traders. Everybody is losing money when the market is making its transition. So the quickly you realize, the better it is. The market has made the transition. It's like a regime change. So market, it's like coup happened. There was a democracy and now the dictator is there. So eventually, suppose let's say virus is a dictator. Eventually, the dictator will be taken out and democracy will be restored. So you assume like that the virus is a dictator. So regime has changed. So the early you identify a regime change, whether it's the market, overall market, or whether that index, or whether that commodity, whatever, and you keep playing the game. And when you realize the regime has changed again, you have to switch the position. So here's NBL. I don't trade NBL because it's a $7, $8 stock, so I just removed it. It was in my database, so I clean up my database. So these days I'm cleaning my database a lot because a lot of stocks are just going to $5, $6. So NBL was in my database because it's above 20. So my rule is above 20. But then it came to my opening range system, and it after this gap down, so it looked good. I bought the puts, but the next day I just took took my profit at the support level. When it hit the support, I said, okay, we need to exit. Qualcomm. So Qualcomm is the Nasdaq stock. We bought the puts on this gap down, and then next day Qualcomm made another reversal because the market was going up, and the Qualcomm went up along with the market. So again, this is a kind of scary reversal, and we waited for one day, and the next day it is just tanked. And then when it started making another hammer, we exited from Qualcomm and took the profit. Just a second. Yeah. So those are the charts I prepared. Now the Dow Jones. I'll show you the charts of Dow Jones, S&P, Nasdaq. So the market is tanking. S&P 2500 uh, is the support. So the S&P is below 2500. So I was thinking, okay, S&P is trying to conquer 25, 29. So it's sitting at 24, 29, but right now the futures are down. So maybe tomorrow it won't hold. And the longer it takes for the market to cross the resistance, the harder that resistance become, and then the harder the market falls. So maybe this is just the beginning of another big downfall, more downfall. So Dow Jones is sitting at the resistance level right here. So when Dow Jones was going down, people were saying, okay, the Dow Jones support is this. Okay, then another support is this, then another support is this. So how many support we have? This is the support. Now this is the support. So this is the support. So same thing. The stock has this support, this support, this support. The square is will go up. I'll buy after it makes its low. So what is that low? You have to define. What is that support? You have to know. So SPX, this is where the SPX is sitting at the support. So it's trying to close above the support line. But right now the futures are down. So maybe tomorrow it breaks this support level and continue going down. If it continues, the target is 1900 for S&P. So we may see 1900. Yeah. This is NASDAQ 100. So NASDAQ 100 are also bouncing from the support. So all these markets are bouncing from the support. So we have to be careful that the market may find support and then start to rise. But because the market beaten down, so it doesn't mean that the market is start to rise, then we start buying we have to be careful what we are buying. And the market has a way of trapping all of us. So the bear market traps all the bears and all the bulls and take them to the cleaners. It's only few bears left. All the small bears, they are taken to the cleaner because they get trapped in the bull rally. The thing is, market has turned and then they buy stock, and then new wave of selling comes, and then whatever the money left, then there are people who have some dry power, so powder. So they're waiting. They're saying, okay, I have some dry powder. I'll buy all my favorites. So you buy, and then the market has a way of reversing sharply again, and then your dry powder is gone. Now there's no money left, and because you bought it that with the dry powder, now you will hold forever, because that's the dry powder left. So be careful, because when the market is beaten down so much, it cannot just the ship this cannot change quickly. Maybe, who knows, when it changes, I will know on my market software. So IWM is also facing resistance at 110. So you see on the chart. So that's okay, another thing. These lines are my lines. So who says that these lines are real resistance line or support line? It's just beauty lies in the eyes of beholder. So it's me who's drawing this blue line. There's nobody saying that the blue line shall act as resistance or blue line shall act as support, because now she said that. Tomorrow, it may fail, it may cross. So if it crosses, I will say, see, then I tell you the blue line at 110, it was a resistance and it crossed, now it's going up. And if it goes down, then I will say, then I tell you that blue line was acting as a resistance and see, it failed. So I can give you both sides of the story to next week when you come. So do or act based on what the market is doing, and not just blue line or red line. Again, these are our trades for last 2 weeks. So imagine your portfolio growing 100%. All right. So you can take the trial if you want, $17 from time to time. I send the offer for $17 for 1 week, and you can see 1 week is not enough for you to see everything. So people are hung up on a trial. They say, do you have a free trial? I want to see if I can make some money. So yeah, I have a free trial. Not the free trial. I have a $17 trial. You can take $17 trial, and then it's 167. But for you to really see what we are doing, you need to be at least 1 month, ideally 3 months. And I tell you what I do. I have a basket of 500 stocks these days. So out of 500, based on pre-selection, so these 500 are going down. Now only left 450. I cleared 50 stocks out of my basket because 50 stocks are just trash. They are like $4, $5, $3. So I took out all the other 50. So I have 450. Then 450 I divided into further core stocks. I call them core. So out of 450, I have 170. So first I doing when the market opens, there's so many stocks running up and down, up, and so it's scary or crazy how you monitor. So I divided my 450 stocks into three baskets. So my top stocks are 170. So all these stocks are like you name it. I don't trade Google and Amazon. Apple, Alibaba, Baidu, all these Facebook, Home Depot, Lowe's, all these top-notch stocks, so 150. And then there are some beaten down stocks, so 170 stocks are there. So that's the first basket I focus on. And if I cannot, so I keep my focus on that 170. And if I cannot find any sell on 170, then I say open my another, 170. So I open my another 170. And if I cannot find any, then I open my last basket of 170. And if I cannot find anything, then there's no trade. So we send out 8 to 10 trades. So usually it's like 2 trades a day. We send out on a swing trade. Objective is 40 to 100%. You have enough time to act upon the buy alert. Sometimes the stock will move right away and you will miss it if you don't. Otherwise, you have enough time to act, even though if you're working full time. We do provide SMS trade alerts, so you can, so just provide us your phone number and your phone carrier, and we will send you SMS alert. Our email delivery is within few seconds. So the moment I push the button, our servers just send you right away. Gmail is preferred. So we monitor our own email. We have top-notch server just for trading alerts. As soon as the buy alert is sent with the specific buy price, we monitor the fill, and then we send you the sell target. So you can set the sell target. We provide the sell target in terms of stocks. So, and because we cannot calculate the option price, especially the market like that. So but we know where the stock is going. So we provide you stock targets in advance. There at least one target is there, but sometimes there are three. So we do provide, and you can set up a conditional order. So we have a conditional. If you don't know what conditional order, I will hold another short session on conditional order, and you can understand what it is. But every broker has conditional order. Some of them call it activation rule. So it means you sell your option when the stock hits this target. So it's better to sell the option when based on the stock hitting the target or based on the market hitting the target. So for instance, you can say, sell all my puts position when the S&P hits 2200. So irrespective of what your position is doing, all of your position, short position will be closed when S&P hit 2200, or when 5 minutes before market close, or when sell my BABA position when Apple hit 200. So you can do that, doesn't matter. So we do provide, and you can set up conditional order. So, and then there is another service we started, asset protection. I will hold the webinar. So if you're interested in asset protection, it's about ID, legal protection and identity protection. If you're interested, just send us email and we will go from there. All right, so this is it. And you need to be smart trader. So remember, there's you don't need, although I have MBA in finance, I have IT degrees, I have banking degrees, I have commerce degrees, I have business degree, I have all that. I used to be very studious. So I'm studious from the very beginning. When since I was born, reading books. I still read books. Good in math, I'm good in programming, good in system designing. So if you are good in system designing, if you're good in math, if you are a good programmer, okay, good for you. You can create systems and processes. So that's what I do. I create system, I create processes, but you don't need to have degrees. So just common sense to be smart. So all the if education is the people can make money, then all PhDs would be making money. All PhDs, they don't make money in stock trading. So don't think about PhDs or doctors or engineers or MBA in finance. People say, I have done MBA in finance, I will make a lot of money. And I know how the cash flows from one stock to another stock. No, when it comes to Stock market, is a different thing. So you don't need to be street smart. You don't need, you need to be street smart. You don't need degrees in stock trading. So you can take a $17 offer. We will send you, and if you don't receive it, you can send us email at askgenie@mytradegenie.com, and we'll send you the $17. All right. So next, in 2 weeks, I will hold another webinar on another topic to educate you. All right. Let me see if I have any other question. Subhash, I'll give you the information on future trading. Laurie, I'm glad I joined. I'm not getting into all of the trades, but the one I did get into were profitable. Thank you. Nadeem, does your setup have the flexibility to send the alert via text? Yes, we send both email and text. So it's up to you. If you can read email during the day, you can. Otherwise, you can read alert. And all you need is an app to your broker's app to trade. So you don't need, you know, you don't need to be in front of your computer. How do you define your support and resistance? So yes, so this is support. Identifying support and resistance is an art. So there is a 10-month coaching program where I clearly teach. So it's the support and resistance. The way I define is where the market has made its previous turn. Where are the turning points? How many times the market has held at this particular level and at what volume? So how many times, how many days it stayed there, and what was the volume? So all this combined, and it's an art, and it doesn't work all the time. Support and resistance. It's not. Um, so Qualcomm is a great trade, yes. The oils trade, we have two positions in oil, puts position, so we'll discuss later. I use a trade station, so I'm a trade station person. Wuba puts we closed today. Alien also dropped big, so I don't know why you have Alien and Wuba. Open square low. I don't know where the square low is. Really, when the market is bearish, I'm not trying to find the support. I'm just going along with what the market is doing. What about the companies involved with coronavirus vaccine or test kit development? I don't know, but Gilead is involved, but we put what puts on it. So what about it? Why did we buy put and made money? So we are technical traders. I don't know about the fundamentals. I'm not trading fundamentally. I'm just trading based on the what the market is showing. So I do use this is the stock charts. Charts I prepared via stock chart, but I do have a trade station. So I use trade station. And although you wrote a long story, please write email. All right. So you are the super genie. Okay, thank you. Can this technique apply to ETF? You can apply this technique to anything which moves, dog, cat, anything which is moving, you can apply this technique. It doesn't matter. So you put, as long as you have a symbol with the 2 years of data. So you need at least 2 years of data, 2 years of chart to make some meaning. That's why I cannot trade IPO. So I don't know about IPO. Market trend and trend report. May I know when is the report generated? Report generated at midnight, and I send it in the morning at 6 before the market opens. So reports after the market is closed. We do intraday analysis. So I do intraday analysis also on the market and update the important. Looking for something important, something changing. So intraday update I do when let's say the market was going down and then suddenly the market is up 2,000 points. So when the market is up 2,000 points, so what changed internally? So I run, because it takes time. So I run the algorithm to figure it out if something meaningful changed that I should be worried about. And based on the experience, I know that the things have not changed, so it's still okay. But there's an early warning. I have set up an early warning, so it's very early warning. It slightly tells me in advance that there was a buying pressure. So this buying pressure can build up into a trend change. So the buying pressure builds up, then the minor trend will change, then the major trend will change. So all this gradually things happen. So, but it has to start somewhere. So that's what we do for intraday. we look for intraday update. So it's only $27. If you're interested, nobody should trade without that report. All right. So thank you. I'll see you